You ever wondered, why can't I fix my credit? Why am I having such a hard time fixing my credit? Why did my credit get bad in the first place? It may not be your fault. Let me show you why. Your bad credit score may not be your fault at all, because the frequency of information errors on your credit report is at an all-time high. Now, of course, we all know in today's financial landscape, a good credit score is essential for securing a loan, mortgage, and maybe even a job or insurance. But what your bad credit score isn't entirely, may not be your fault. As of the most recent data in an article I read, a significant portion of consumers are grappling with inaccuracies on their credit report, which have a detrimental effect on your financial life. Now, the article I read kind of went into the frequency of these errors and why that your low credit score might not be entirely within your control. So first of all, the prevalence of credit reporting errors is been more widespread than ever. They've been tracking this data for at least a decade, but it's still relevant into today's credit reporting. And as much as the government has been fighting for credit bureaus to be more accurate, it's even worse than ever. Now, of course, we all know your credit report is that detailed record of your credit history, including information about all your accounts, your payment history, public records, and including bankruptcies. Now, the basis for which your credit scores are calculated is based on a number of factors, which I've talked about before. Things like paying on time, the amount of your credit you use, the type of credit you use, the mix of credit, and then of course, scores vary depending on various scoring models. You can see my other video where I talked about the difference between FICO and Vantage, and then the various versions within the FICO family of credit score models. Now, according to a study that was done by the FTC back in 2013, they had determined that 1 in 4, 25% of consumers had easily identified errors on their credit report that would have an impact on their scores. Now, what was even more alarming back then was that about 5% of the people who responded said that the errors that was on at least one of their 3 credit bureaus was serious enough to cause them to be denied a loan, whether it was a mortgage, an auto loan, or more importantly, a number of them were talking about differences in denials for insurance, whether it be automotive insurance or homeowners insurance. Now, even though that study is more than a decade old, there's even more recent data that suggests that the problem not only does it persist, but it's even worse. Now, the Consumer Finance Protection Bureau that we known as the CFPB, that's the government agency that oversees the credit reporting industry. In other words, they're the ones who dictate and monitor that the credit bureaus and the creditors, when they're reporting to the bureaus, that they're responsible for being true and accurate when they report the information on our credit reports. Now, the most recent data, which was from 2022, it showed that credit reports errors still remains a top consumer complaint. And of course, me being in the credit repair space, I'm oftentimes one of the first things I do with folks when they've indicated to me that there are things on their credit that are not accurate. I request validation and verification as a standard part of what I do to determine what's true and accurate, and anything that's not gets removed automatically. Now, not only do we have that, but the fact remains that errors on the credit report are consistently among the most common complaints submitted to the CFPB as well. Because I myself, when I look to validate and verify, and when creditors or collection agencies refuse to acknowledge that and correct it, I oftentimes submit complaints to the CFPB myself in order to get things resolved. Now I'm going to talk about the most common types of credit report errors and then how to tackle them. Now there's 5 that really always seems to come to mind. You have incorrect personal information, errors like spelling of name, AKAs that my clients never use, even addresses and social security numbers that are inaccurate. Now, these kind of errors can cause your credit history to be mixed up with someone else's with a similar name or similar social security number. I myself had to contend with that back in the late 80s, early 90s, while I had someone who had a similar name to mine and their credit was being mixed up with mine. And it took me 4 years to get that straightened out back at a time before credit monitoring. You had to do everything. There was no dispute process, no streamlined dispute process. So that's a big problem. Secondly, account status errors. This occurs when you have something like a closed account that's reported as still being open, or accounts inaccurately marked as delinquent or in collections. I've also seen too in clients where they had an account that was in collections, they paid it off, and prior to working with me, they paid it off, and then the collection agency did not update the account according to its current status. It would still show collections, it would still show delinquent. Oftentimes, I've seen accounts with 0 balances still showing 30, 60, 90 days late, which obviously makes no sense. How can an account be 90 days late if you don't owe any money? And those are things that I commonly address and get updated, if not removed altogether, if not having the entire account removed altogether. The third thing is things that we call data management errors. Now, sometimes you make a payment and you made it on time, but yet it was reported as late. And again, in my validation verification process, we usually get those fixed, because if they report you as late and we ask for validation verification, they have to provide proof that you were actually late. More times than not, because they can't find the proof because it doesn't exist, then late payment gets updated. But if it's correctly late, then of course there's nothing you can do to remove a late. There's hardly anything you can do to remove a late payment. You can ask for a courtesy removal, which I've done many times, where if you've only had 1 late payment in the history of the account, and we ask the creditor to remove that, to waive that late 30-day payment as a customer courtesy based on an extreme situation that caused the late. Like we had a recent blackout here. A lot of people probably couldn't make their payments because they may not have had internet either. And so that they may have resulted in a late payment. But something like that. Duplicate accounts. Oftentimes you'll have the same debt listed more than once. Sometimes it was listed with the original creditor then sold it to a collection agency, and now the same account is being reported by both parties. That's a duplication. That's double dinging you. Again, I know how to get those removed, because that's not legal. That's not correct. And then lastly, fraudulent accounts altogether. Accounts that were opened fraudulently in your name, and it's on your credit, and that can be a little more involved to do, but not heavily so. It's just usually it starts with a police report, because if you report that this is fraudulent activity, and then you can notify the credit bureaus that someone may have access to that, and then you can put a freeze on your credit or put a flag on there, or you can request a special step that they contact you directly. If anyone attempts to take out credit in your name, they have to contact you first. The creditor who they're applying to has to call you by whatever number you designate and literally speak to you on the phone and say, hey, we're doing a double check, that sort of thing. Now, of course, how these fraudulent items and these errors impact your credit score can vary. But one thing is for certain, the errors have a substantial impact on your credit score. For instance, A single late payment, like I was talking about before, even if it's imported as being incorrect, can cost your score. I've seen people can cause your score to go down, because I've seen folks have a 700 score, one 30-day late on a car loan, and they go from 700 to 620, 80 points drop just from one late payment. So it's really important to pay on time. And then it's really important to make sure that nothing's being reported incorrectly as being late, because it really can cream your credit score. Okay, and the impact is really bad with someone who already had a 620 and now they get a incorrect 30-day late or some other lateness, and now it pushes them even further down, where they're being pushed into the 5s or even the 4s. I mean, I've seen it. I've taken folks from 450 to 750, but sometimes that's an impact of that. Now, as they fall down what we call the credit worthiness ladder, it makes it harder for them to get a secured loan. It makes it harder for them to get credit cards with favorable terms. So it may push you down to not out of approval territory, but you're getting worse terms. You're getting higher interest rates and things like that. They may require more money down on a vehicle purchase, or they may severely curb how much of a credit card they open up. And of course, we all know if you have a low credit limit credit card, it's really not really a benefit to you at all. So we want you to be in a place where you can get higher limits, better interest rates, where at least as best you can get with a credit card, because credit cards, we know, of course, are not known for having super low interest rates, but it's all relative because there are ranges. In addition to that, in addition to the bad terms, the higher interest rates, so on and so forth, insurance companies are looking at credit, and you could end up with a higher insurance premium if you get approved at all on insurance, because they kind of look at it as, if you're a person that demonstrates less than great credit, it's a judgment call. And so they say, well, maybe you're not a good driver, maybe you're not responsible. And so although that might not seem fair, but that's the rationale that they get with that. So remember, that credit score is important in that regard too, not just on your borrowing capacity, but also in your ability to get other financial services as well. Even worse than that, there are a lot of employers, depending on the type of job, especially if it's in fiduciary, which means they're trusting you with money or decisions, they're looking at credit, because it's a known fact that a person who is in financial distress is more likely to cut corners or cheat or embezzle or steal to get themselves out of their own personal predicament. So keep in mind, a bad credit score or challenging credit history can stop you from some good employment opportunities as well. Then there's other long-term financial implications, which can be severe on top of all the things that we've already talked about. Because as you know, these are all foundational things, foundational towards a better life, a better lifestyle, wealth building, and financial, the journey for financial independence, financial freedom, if you will. So the important thing is that you monitor your credit so errors like these don't go undetected for a long time, because what they tend to do is they don't just drop your score once, they will continue to drag on your score. And that's why oftentimes folks who come to me for help, they may be in the 400s. It's not because they went belly up on everything, but they had errors that went on unchecked and they never paid attention to them, or they noticed their score dropping, but they never took the time to look to see exactly what's going on, where me or someone like me in the industry that's reputable can help someone point those things out, and we can help resolve those things to get you back into a better place. So then you might wonder, or you maybe not, why did this even happen in the first place? In this age of technology, why can't these things be accurate? Well, I mean, there's various reasons why these errors happen, and it can get a little complex, and I'm not going to go into a whole slew of things with that. But I can tell you this, It can be something as simple as human clerical error. Someone hit a digit, somebody mistyped, cross-referenced with the wrong thing, or it could be as really as bad as straight up identity theft, like I referenced before. In many cases, the credit reporting agencies are receiving incorrect data from the creditor, the person you have the account with or company you have the account with. More times than not, they're receiving incorrect information from them. And then when it gets reflected on your report, you notice it, then we reach out to them, and then they go back to them and say, hey, can you double check this? Which is what I referred to before as either or validation and or verification. In addition to that, errors can occur during the data process. Like I said, people can get mixed up. They can mix up yours with someone with a similar name or similar social security number. And while the credit bureaus I think they do strive for accuracy, and plus they have to because they are mandated by law. There's various laws. There's the Credit Repair Act. The Credit Reporting Act, and then the Consumer Finance Protection Bureau are the watchdog group for the government that made sure that this happens. They're handling vast amounts of data. They're getting stuff coming in every day. Your creditors report to the credit bureaus every day based on their schedule. Your stuff doesn't come to the credit bureaus all at once on one day of the month. They're getting data in all the time, 24 hours a day, vast amounts, trillions of pieces, they estimate. And so just in sheer numbers game, those errors are gonna happen. But it's up to us individually to look out for our own credit, let them worry about the rest. You make sure. So that's why I always recommend that you use a credit monitoring service that allows you to see it all three of your credit bureaus, TransUnion, Experian, and Equifax. But here's the important thing. Look beyond just the score. Look at your actual accounts. Look at the actual trade lines. Make sure the information is being reported properly. Don't just look up and say, oh, my score went up, went down, and say, I'm good. If it goes up, woohoo. If it goes down, oh man, what the heck is going on? Look at the accounts. It just take a few minutes, and then you get to know your accounts. You know what you got. Just make sure it is right so that you don't have these problems and you can always have a maximum score. What else can you do? Check your credit report regularly, like I said, in credit monitoring. Of course, in addition to a paid service, we all are entitled to one free copy of all three bureaus from annualcreditreport.com. And the reason why, even if you have credit monitoring that you're paying for, whether it's Credit Karma, Credit Wise, or whatever, go to annualcreditreport.com because these are the master file. Think of them as the master file. This is your reports coming from each bureau directly. No middleman, no vendor, no broker. It's the full account, not just the recent account, but everything, your whole credit history from birth, from the birth of your credit. Not your personal, your physical birth, but your birth, because it's everything that you ever had with them. You get it once a year, but it's important to look at that in addition to that real-time credit monitoring, which allows you to spot fraud and things like that in a timely manner. So do that, annualcreditreport.com. It's free. You just got to do it once for each of the three bureaus. They don't give you scores, but you get your whole report. You can either print it out, which I don't recommend because it's a lot of pages, but you can download a PDF, keep it, and then you can study it. You download it and you hold on to it, and then when you got time, just study through that whole thing and make sure everything is good. When you do find errors, you should dispute them immediately. Now, you don't have to hire somebody like me. You can use the online dispute process that the credit bureaus have. They each have a link, a backdoor that allows you to dispute. Just understand that you may run into a little resistance with them, but 9 times out of 10, they will, if you dispute it properly and just ask for them to update and just follow the steps. But if you find that you get lost, you can reference other materials out there. You can you can contact me or someone like me that can help you through that as well. But the key is, if you see errors, dispute them, find out what's what, and then get it validated and verified, and then go through the process of having them corrected and updated. Now, of course, you have to give them time to investigate and correct. The law says we got to give them 30 days from the time they receive the request. So keep in mind, it can be a little bit of a timely process. It's not it gets done in a day type of thing. So do keep that in mind. In addition, keep records of your own regarding your disputes. So when you dispute, make sure you note the time, and you keep records of all the communications with the bureaus. If you end up having to reach out to that creditor to correct, if the creditor says this is correct, and you go to them and say, hey man, why are you guys saying I'm late? I was never late. Show me where I was late. And then you keep records on that stuff. So if it comes down to it, they're not willing to help you, and you have to go to someone like the Consumer Finance Protection Bureau. Documentation goes a long way towards getting a successful correction to that error. Again, if someone like me, part of my service is I'll have that documentation for you, and I'll maintain that in your help and in the service of helping you with your issue. But keeping those records is what's important, because that documentation is invaluable when you need to escalate. And then consider the credit monitoring service like I spoke before. Again, they will alert you, so that the idea is there when the damage is done, you want to be able to fix it quickly. I mean, there's a lot of debate about which ones are right, which one's better. Again, you can see my video on that as well. But the key is, if the monitoring, the information they're monitoring, there is no right or wrong, because that's direct information as far as which credit monitoring service is right. Because people always talk about, when they comparing scoring models between one bureau and another, and they say, hey, that one's not accurate, this one's not accurate. When in the credit monitoring game, focus on the data, not the score. Because if you focus on the data and then your data is correct, then the score is going to be accurate in terms of no matter which scoring model you use. But then when you have your information, your history, and all your data correct, you'll get the correct score based on the reality, not what you think it is, and not based on some imaginary thinking about what it is. So just keep in mind, maintaining your credit is essential. It's important that you recognize that, not all the factors affecting your score are within your control. The frequency of errors is going to be consistent. And because of that, that low score may not be your fault. Now, of course, you do want to address the things that may be your fault, things like late payments, don't pay late, high credit utilization. So if you got a credit card, try to stay as low as possible, but at least stay below 30% of your available spending limit. Don't carry a balance higher than that, because that drags your score down. Making sure you don't have too much credit. You want to have a nice mix. You don't want all credit cards and no loans. Ideally, you'd like to have a short-term loan like an auto loan, a long-term loan like a mortgage if you want to own your home, and 2-3 credit cards. But you can have as many cards as you want, as long as you're maintaining them at the same higher levels. But by staying vigilant and taking those steps to monitor and correct your credit reports, you can better protect your financial health and ensure that your credit score accurately reflects your true credit worthiness. So I hope that you like this video. I hope you find it helpful to you. I ask that you please like and subscribe, and please put comments in below. Tell me what you guys would love to see in future videos, what you thought of this video, because I want to put out information that folks find useful and the things that people are looking for. So please like and subscribe and share even, so that I can continue to give you more comments. All right, you guys have a blessed day. and see you next time.